What does the UK's economic forecast for 2024 look like? As we venture into the year 2024, the UK's economic landscape is shrouded in a cloud of uncertainties. Some experts anticipate modest growth, while others caution against stagnation or worse, a looming recession. Perhaps one of the most notable factors casting a shadow over the economy is the Bank of England's rather bleak forecast. The bank predicts a continuation of the economic sluggishness we've been experiencing, largely due to a host of factors. Rising interest rates, for one, are expected to prove a significant headwind. As borrowing costs increase, we're likely to see a dampening effect on consumer spending and business investment. Coupled with this is the issue of high inflation. Although inflation rates are expected to fall, they're still projected to be higher than usual, putting a squeeze on household budgets. Meanwhile, the government's decision to withdraw pandemic support and raise taxes is set to tighten wallets further. This policy shift, though necessary to balance the books, will undoubtedly apply additional pressure on the economy. Externally, a weak global economy presents yet another challenge. The UK's export-oriented economy is vulnerable to slow growth and stagnant world trade, which could further dampen economic prospects. But it's not all doom and gloom. There are some silver linings on the horizon. For instance, a projected decrease in inflation could potentially lead to positive, real wage growth. Additionally, a slight rise in business optimism, partly due to lower energy and goods prices, might translate into increased investment. However, these positive signs are interspersed with uncertainties and potential risks. The impact of increased immigration, the balance between wage growth and inflation, the potential shock of sustained higher borrowing costs, and the possibility of persistent inflation all add layers of complexity to the economic forecast. In the worst-case scenario, efforts to curb inflation could trigger a deep recession, posing a significant challenge to the government and potentially impacting Prime Minister Sunak's re-election bid. While there are some positive signs, the UK economy in 2024 faces a complex situation with potential for stagnant growth or even a recession. What factors are likely to dampen the UK's economic growth? Let's start with the Bank of England's forecast. The central bank itself is predicting continued sluggishness in 2024, and this certainly doesn't bode well for the economy. Next, we have rising interest rates. The cost of borrowing is set to climb, and this will likely put a damper on consumer spending and business investment. When it costs more to borrow, people tend to pull back on their spending, and businesses are less likely to invest in expansion. Then there's inflation. Even though it's expected to fall, it will still be higher than usual. This puts a squeeze on household budgets, making it harder for families to make ends meet. And when people are struggling to pay their bills, they're not out there spending and stimulating the economy. We also have to consider tax increases, and the government is planning to withdraw some of the support it provided during the pandemic and raise taxes to help balance the books. This means that wallets will be even tighter, further reducing spending. And let's not forget about the state of the global economy. Growth has been slow worldwide and international trade has been stagnant. This poses a particular threat to the UK, which has a highly export-oriented economy. These factors, individually and combined, pose significant challenges to the UK's economic growth. The balance between these headwinds and any potential tailwinds will be crucial in determining whether the UK economy manages to grow, stagnates, or even slips into recession in 2024. Are there any silver linings on the horizon for the UK's economy, you might ask? Well, let's delve into a couple of potential positives that could provide a much-needed boost in 2024. Firstly, let's talk about inflation. Yes, it's been a bit of a boogeyman for the economy recently, but there are indications that it could be set to decrease. What does that mean? Well, if inflation falls, we could see a rise in real wage growth. In simple terms, this means that wages could increase at a faster rate than inflation. This would be a welcome change for many households that have found their budgets squeezed by the rising cost of living. Now let's turn our attention to the business sector. There is a sliver of optimism here, with a slight uptick in business confidence on the horizon. This is partly due to lower energy and goods prices, which could lead to increased investment. And as we all know, investment is a key driver of economic growth, so this could be a positive sign for the UK's economy in the coming year. But it's not all smooth sailing. Even with these potential silver linings, there are still significant challenges that the UK economy will need to navigate. For instance, even if wages do increase, it's unclear whether they will outpace inflation. This could leave disposable incomes below pre-pandemic levels until 2027. And let's not forget about the potential impact of increased borrowing costs. Businesses and households that have grown accustomed to historically low interest rates could struggle with higher borrowing costs. This could dampen consumer spending and business investment, potentially offsetting any benefits from falling inflation and increased business optimism. So while there are some potential positives on the horizon, the UK's economic outlook for 2024 remains uncertain. The combined impact of government policies, global economic conditions, and the Bank of England's actions will ultimately determine whether these silver linings can provide a much-needed boost to the UK's economy. Despite the headwinds, there are some promising signs that could provide a boost to the UK's economy. What uncertainties and risks could impact the UK's economy in 2024? As we navigate through the foggy landscape of the upcoming year, we encounter several potential pitfalls and unknowns. Firstly, let's consider net migration. An increase in immigration could swell the population and, in theory, the workforce. However, it's not clear if this would necessarily lead to improved average wages or living standards. The balance between population growth and economic prosperity is a delicate one. Next, the battle between wage growth and inflation. Wages are expected to rise, but will they outpace inflation? If they don't, we could see disposable income remaining below pre-pandemic levels until 2027. This would mean that despite earning more, people would be able to purchase less. Then there's the potential interest rate shock. Businesses and households, having enjoyed a long period of historically low interest rates, may find themselves in difficult waters if these rates rise significantly. Higher borrowing costs could lead to reduced spending and investment, putting a strain on both businesses and individuals. We must also consider persistent inflation. While inflation is expected to fall, underlying inflationary pressures or the Bank of England's efforts to regain control over inflation could slow this descent. If inflation remains high, the cost of living will continue to squeeze households and businesses alike. Finally, let's contemplate the worst-case scenario, a deep recession. If efforts to curb inflation go too far, they could tip the economy into a significant downturn. This would present a major challenge for the government and could even impact Prime Minister Sunak's chances of re-election. These uncertainties add another layer of complexity to the economic forecast for 2024. As we continue to explore the UK's economic landscape, it's clear that we need to be prepared for a range of outcomes. Only time will tell which of these potential risks will materialize and how they will shape the economy in the year to come. How is the rental crisis affecting landlords and the overall economy? An intriguing question, isn't it? Indeed, the rental market in the UK has been experiencing a significant shift. More and more landlords are choosing to sell off their properties. What's driving this exodus? Well, it's a mix of factors. Firstly, there's the issue of regulatory changes. The tide of regulation has turned against landlords in the last few years, with a series of new rules making it harder to evict tenants and increasing the financial burden on property owners. Moreover, the introduction of the Tenant Fees Act has limited the charges that landlords can impose on tenants, further squeezing their profits. Secondly, the tax changes imposed by the government have made buy-to-let investments less attractive. The phasing out of mortgage interest tax relief and the introduction of a higher rate of stamp duty for second homes have significantly increased the cost of owning rental properties. Then there's the issue of the COVID-19 pandemic. The virus has wreaked havoc on the rental market, with lockdowns leading to unpaid rents and difficulties in finding new tenants. This has left many landlords in a precarious financial position, with some choosing to cut their losses and exit the market. But what does this mean for the wider economy? Well, the selling off of rental properties could lead to a glut of homes on the market, potentially driving down house prices. This could have a knock-on effect on the construction industry and the wider economy. Moreover, fewer rental properties could lead to increased rents for those who remain in the sector, exacerbating the housing affordability crisis and potentially leading to increased homelessness. However, it's not all doom and gloom. The exodus of landlords could create opportunities for first-time buyers who have traditionally been priced out of the market. The rental crisis is yet another factor that could significantly influence the UK's economic landscape in 2024. So, keep an eye on how this situation unfolds. It might just be the wild card in the UK's economic forecast.